Hello and welcome to this week's Query of the Week. My name is John Murphy and I work in the OmniPro Practice Support and Tax and Legal department here in OmniPro. So this week's Query of the Week came in when we were advising clients on the financial reporting disclosures for FRS 102, where there was a transaction, where there was a reconstruction, I suppose. Just to explain it, in this particular example, there was a transfer of a business, a trade out of one company into a new company owned by the same individual. So it's a transfer out of one company of a business into a new company owned by the same individuals, but they weren't in the same group. So the question arose, well, look, what sort of disclosures do I need to put in my financial statement as a result of this transaction? So a reminder again, so there was one business, there was one company that had a business and investment assets. So they wanted to separate the business away from the investment assets. So they transferred out the business out of the company into a new company owned by the shareholders of the first mentioned company. And the question was, what disclosures do we need in the company that transferred out and the company that transferred it in? So I suppose to deal with that, then where are we looking in FRS 102 and in company law? So Section 33 deals with full FRS 102. It says, where there's transactions between related parties, well, then you need to disclose those transactions and give details of the transaction. From that perspective, Section 1A of FRS 102 will also say that, more specifically, I suppose, Companies Act, which is where Section 1A is being derived from, is from Companies Act for Small Companies regime, which also applies to the medium and large companies. Section 309 requires you to give details of transactions with companies that the directors were connected with effectively. So in this example, that was the case. They're both directors, the same directors in each company. There was a material interest. They both owned 100% of the board of the company. So there was transactions between them. So Section 309 required a disclosure of the details of the transaction and date of the transaction and who it was with. So that's Section 1A, I suppose, Companies Act. And then full FRS 102 itself, Section 33 also requires similar disclosures. So in this example, I suppose in the company that transferred out, you would have a note stating that, during the year, the company transferred its XYZ business to another company, XYZ Limited, which was owned by the director of the company. The details of the assets that were transferred out on the X date were, cash, debtors, fixed assets, stock, creditors, whatever they are, to give the net amount. And and then you'll explain that these shares were issued, in return for transferring the undertaking. Likewise, in the company that received it, you'll have a similar disclosure as required by Section 33, Section 1A, and Section 309 of Companies Act 2014. Detail the fact that on the X date, the company acquired the trade of XYZ from the other company in return for shares, and details of the assets that were transferred in were XYZ. And I suppose the reason why in company law that needs to be disclosed is because Section 220 of Companies Act deals with connected persons. So all the directors' disclosures in Section 305 to 309 requires disclosures of the directors' transactions, which include connected persons. Connected persons in Section 220 includes a company where transactions are entered into a company with which director has 50% more of an interest in the ordinary share capital. So in this example, both shareholders were the very same and directors. Therefore, that's why disclosure occurred. Just while we're on this point on disclosures, an important point, which is a lot of times missed, is that if your director's remuneration, your direct transaction, it includes children. If there's transaction, wages being paid to the director's children, the spouse, a partner, being a partner in a partnership, well, then they would need to be disclosed in that note as well. So it's just sometimes, when you're looking at the files and, I'm speaking to the lads who do the monitoring business, that's where they get caught in these type of related party disclosures. So I hope you've found this helpful, and put you a few reminders for your clients and your files. If you're interested in this area, we have got a webinar on the 19th of June.